Futures and options are inherently risky and not suitable for all investors. Only risk capital should be used. An investor may lose more than the original investment. Past performance is not necessarily indicative of future results.
All right, Matt, I just popped up here. It's Thursday, April 26th. It's about 11:30 Central. Got an auction in a half hour, so let's keep this short and sweet. We did a bond trade last week. All right, so let's just go over that.
Well, we discussed in last week's video. We discussed for those who were bearish here and expecting the bonds to roll back over. We discussed the purchase of a June bond 142 put. Okay, now. Since that time, the trade was slightly profitable, a couple $100 maybe at one point. I think the big enchilada was yesterday, and we did see the bonds sell off initially on the FOMC, but the key here was, as Bernanke spoke later in the day, he did eventually allude to another QE3 in the sense that he said the Fed has additional tools available for further accommodation if necessary. So I took that as QE3 is still on the table, and I think that's how the bond market took it as well, because we did see bonds come off the lows and everything at that point. So now, before I get into the actual trade, just remember you should only be using risk capital for any of these trades I discuss here. If you sell naked options, you can lose more than your initial investment. Okay, use common sense, make sure it's appropriate. At this point, looking at that trade, although the trade was profitable at one point, as of right now it's showing a small loss, and I would probably go ahead and cut the trade at this point, okay? And the reason is because you're long an option, today's Thursday, tomorrow's Friday, we got the weekend, volatility continues to drop actually in the bonds, the time decay is going to really start eating into this position. So I would look to take the small loss and go on to the next one, okay? And at this point, right where we're sitting, I would be patient. You know, we're right back in that range. Let the market show its hand. You know, do we get a breakout to the upside? Do we roll back over? If we test the top of that range, that may present some good short opportunities up there. But I think here you got to watch the price action and just kind of see what happens.
Okay.
So,
all right. All right. Thanks.
All right.
Thanks, Matt.